My name is Michael Valtos. I'm the founder of orderflows.com, and today I'm going to show you how to improve your trading results with order flow. So again, I want to thank Renee, I want to thank Investor Inspiration for having me back. I do this about once a month, and I really appreciate it and get my message out to other traders. And today you're going to be in for a treat. It doesn't matter if you're new to order flow trading or if you've been order flow trading for years. I'm going to show you a few simple ways to apply order flow to improve your trading results. So again, I'm not sure why you came here today, but hopefully you can get something out of my presentation. And my goal today, by the time I finish this presentation, is I'm going to show you how to learn order flow fast. Forget about that 10,000 hour rule nonsense that you read about, being posted in trading forums by people that, have never traded with real money, giving advice to other people on how they should be trading. How to quickly gain an edge in your trading with order flow. Everyone talks about having an edge, when you trade, but they don't really go into it, how you can get an edge. And order flow gives you an edge, and I'll show you how. I'm going to show you how to understand the underlying forces and players that move the markets. And lastly, I'm going to show you how to easily spot market imbalance and use it to your advantage. And if you stick around to the end, I got two special gifts for you. The first one is my 150-page book on trading order flow. It's a download, so don't worry, I'm not going to send you a big, 150-page hardcover book like in the picture. And I'm going to show you how to get a free order flow tool that I developed called the Order Flows Delta Surge Indicator. You can go to my website. I'll show you how to do that, and I'll show you some examples on how to use it in your trading. So for those that are not familiar with me and who I am, my name is Michael Valtos, and I've been trading futures at an institutional level for 20 years. I started on the CME floor, and I worked my way up from there. I spent 2 years at EDF Manuals, the big English trading company that's been around since the 1700s. I was with Cargill for 4 years. I even, if you're not familiar with Cargill, it's the largest privately held corporation in the United States. They've got trading offices literally in every country around the world, and they've even sent me out to Singapore to set up a trading desk there. I spent 3 years at Commerzbank in Chicago as a Eurex trader. Commerzbank is a big German bank, but when Eurex, started giving out trading terminals, Commerzbank had one, and I joined them as their Eurex trader. And lastly, most recently, I was a futures trader at JP Morgan for 8 years. And being in an investment bank for 8 years is like a lifetime. Most people, last 3 or 4 years. Somehow I managed to survive there at 8 years. Why? Because what I do, I make money. I know what I'm doing for the bank. And again, I'm not giving this information to, say, hey, look, everybody, I have this great resume. No, not at all. I just want you to know that what I'm talking about today, comes from real life practical trading experience. And that's what I did for a living. That's how I paid my bills. That's how I paid my house. That's how I paid my car. That's how I supported myself. So it wasn't like I was just sim trading and I thought, hey, order flow is great. I want to teach this to other people. No, I actually traded for many, many years. And this presentation is not about me. It's about you. I do this so I could teach you how to read the market, how to become a better trader. And I'm going to show you how order flow analysis will help you in your trading in the least amount of time possible. No one wants to spend a lot of time learning something. You want to get from point A to point B as quickly as possible. But again, before I jump in, I want to go through a disclaimer. I don't want people coming in thinking this is some get-rich-quick scheme. There's a lot of unscrupulous people out there in the world that sell trading systems as some holy grail. So this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make it a type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should use for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And let me just say, not everybody's results are going to be the same. It's not like you can just go out and buy software and think it's going to turn you into a master trader. No, you have to apply it. You have to take the time to learn how to use it. So, if you don't take the time to learn how to use it, your results aren't going to be as good as somebody that does take the time to learn how to use it. Order flow, people always say, well, what's order flow? It's complex. I'm just, just give me a system. Well, here, these are just ads I've taken off Facebook. People selling for $12. You could buy the Scalping Pro indicator best fought. I think you can't even type 4 properly for 15 minutes or higher. 100% profit, 0% loss. $12. Hey, that's great. If I could just, instead of buying Starbucks tomorrow for myself and my wife, I could buy this indicator and never have a losing trade. I mean, come on, be serious. People fall for that. That's not teaching you how to trade. That's just someone coming up with some mathematical derivation of price that just happened to work on a certain time period in the past. There's no guarantee that it's going to work again in the future because it's not based on anything. It's just taking what happened in the past and curve fitting some system around it. So this is an order flow volume footprint chart. This is my chart from the order flows trader software. And it's a footprint chart. It tells you the volume traded on the bid, the volume traded on the offer. And with order flow, there's really three things you need to focus on: point of control, delta, and imbalances. And just really quick, a point of control in a bar is the level in the bar that has the most volume traded, and there'll be a box around it. The delta on the order flows trader software runs along the bottom of the chart. And what it tells you is the difference between aggressive buyers and aggressive sellers in that bar. Now, why is that important? Because on a market that's going up, you should be seeing positive delta. On a market that's moving down, the bars should have negative delta. There are times where you have divergence, okay, and sometimes you get a down bar with positive delta, and those bars have different meanings. I'm not going to really delve into that in this presentation, but I've done a lot of videos on, posted them on the website on YouTube. You're welcome to go check them out. And imbalances. What's an imbalance is when you have more volume traded either on the bid against the offer or traded on the offer versus the bid. The market's a two-way auction. There's a bid, there's an offer, and an imbalance will show up. There's a selling imbalance and a buying imbalance. A red number, 937 against 77 on this bar here in the middle. This is a selling imbalance because you have more sellers, more people selling into this bid here. That's causing an imbalance. Now, you could use whatever ratio you like. The industry standard is about 4 to 1, 400%. Now I know people that use a different number. They use 500%. Some people I know use 1,000. They're just looking for big imbalances. But the industry standard is 400%, or 4 to 1. That's what I use on my charts, and it serves me well. A blue number like 14 against 618 on this green bar here on the low. This is a buying imbalance. Now, you also see black numbers. These are just the normal order flow that's occurring in the bar during the course of trading. Why do markets exist? Well, they exist to facilitate trade. So that's why you don't see lots of buying imbalances and lots of selling imbalances occurring at every price level, because the market is doing what it's supposed to do. It's facilitating trade. So there are many different aspects of order flow, and I often tell people, if you could just add one piece of order flow, you don't have to add everything, but if you just add one piece, it can really transform your trading, because it's going to put you ahead of the rest of the trading public. And why is that? Because most traders out there use indicators that are derived strictly off of price. They don't take into account value, but when you think about it, you're just missing out an extra piece of the puzzle. And why is value important? Because every day you subconsciously judge things in value. You go to the grocery store to buy something. If a loaf of bread is normally you pay $1 for it, if all of a sudden it's $2, you might think twice about buying it until the price comes down to $1. But you know what? If it's normally $1 and all of a sudden it's on sale for 75 cents, you're going to buy it. You're not even going to think twice about it. And that's just an extra piece of the trading puzzle value that a lot of people overlook. So is order flow difficult to learn? Well, if you go to a bunch of websites, a bunch of trading forums, you might think it is, because people say, oh, you need 10,000 hours of screen time, to master it. I mean, honestly, who has that amount of time to spare? No trader, no firm is going to hire a trader and give them years to learn how to become a good trader. Trading firms want results. They don't want to invest money in you and wait for you to become a good trader. They expect you to know how to trade. And what I'm teaching you today is going to teach you how to use order flow in your trading quickly. Forget 10,000 hours. Break it down. 90 minutes a day to get to 10,000 hours, that's 20 years. Your beard will go to the floor. You'll look like Rumpelstiltskin by the time you get to 10,000 hours. Forget about trading. 3 hours a day, and this is every day. It'll take you about 9 years. That's 3,333 days. If you spend 9 hours a day, if you make it a full-time occupation, do nothing else, that'll take you 3 years. Okay? Again, people don't have 10,000 hours to spare. But before you could even begin trading with order flow, ask yourself, is order flow trading for you? If you're looking for a red light, green light trading system, don't waste your time here. Don't waste your time trying to learn order flow, because order flow is not a red light, green light trading system. It's not some holy grail, but rather it's a skill set that once you learn it and internalize it, trading becomes second nature, because you'll be anticipating what can happen in the market based on what's currently happening in the market. And what do I mean by that is, think back to when you learned how to drive a car, right? You read a book. You had your driver's ed class. I'm from Illinois. The book was called The Rules of the Road. And, you sit in class, you watch videos, people driving, getting in car accidents, what not to do. But then you got into the car and you started driving. And did it take you 10,000 hours to become a good driver? No, it just took you a couple weeks. And now, years later, for me, it's, I hate to say 30 years later, but I'm very good at driving. I could merge into the traffic. If I'm driving down the road at a high rate of speed and the car in front of me starts acting up, starts swerving, I know how to react without having to flip through pages of a book on how to react. If I'm driving down the road and the guy next to me looks like he wants to cut in on me, I know to judge on what's next to me, what's behind me, what's in front of me, how to avoid danger. And that's what order flow will do for you in the market. It will teach you how to navigate the traffic in the market, so to speak. So let me be clear again, before I jump into really in depth about order flow, with order flow you have to make trading decisions. That's what trading is about. Again, order flow is not a red light, green light trading system, but honestly, when you understand order flow, you will understand the market and the decisions will become crystal clear, and honestly it will feel like a red light, green light trading system, because you'll be anticipating what's happening in the market based on what you're seeing unfold right before your eyes. So do you have an edge in the market? You should be asking yourself now when you're trading, do I really have an edge in the market? I see these posts on Facebook. My wife is a big Facebook user, so I got to be active on Facebook to show my affection for her. And so of course I join a lot of these trading groups and pages, and I get these posts coming up on my timeline. Hi, I'm a beginner. What's the best time frame to trade on? 5 minute, 15 minute, 30 minute, 1 minute. In a day, that's got 45 replies. There's some people saying, no, you got to trade on a 1 minute. No, some people say you got to trade on an hour. Some people say, stick to daily charts. Some people say, trade with a 4-hour chart and a 1-hour chart, and for confirmation, and then take a trade based on a 15-minute chart. There's just so many different ways. Is that really giving you an edge? You don't know, how to trade, and you're taking advice from somebody that doesn't know what they're talking about. Another post, what's the best exponential moving averages to use? 20 comments in a day. And I'll be honest with you, moving averages, RSI, most of these indicators out there have been data mined to death. And this goes back to, when home computers, came out. Before you access computer, you had to be a company or you had to be in a school, but still people were testing all sorts of combinations of moving averages, RSI, MACD, but still people, are coming into the market thinking they're finding some secret combination of a moving average and MACD and RSI and whatever, and they're going to all of a sudden start making a lot of money trading. That's not necessarily going to happen. Back in the 90s, I had software, System Writer, TradeStation, that would allow me to test all these things. And that was 20 years ago. So, I've been through that phase. And let me tell you, it may work in the short term because you're testing it over a certain sample period, but going forward, chances are it's not going to continue to work. If it did, everyone would be using it. I'm sorry, I got this cold I'm fighting. I got some coughs coming in. But what's my edge is order flow. And it's been my edge for a long time. And why is it important? It's because it tells me what's happening in the market. Where are areas where buyers are being aggressive, areas where sellers are being aggressive, areas where price is being rejected. It's giving me market-generated support and resistance levels, and much more. It's going to show you the hidden strengths in the market. When you get the highs or lows, you want to be asking, is this high going to hold? Is this low going to hold? If you can have a market-generated support or resistance level, that's going to be better than any other level you're getting drawing off a chart, going back how many years. And, more importantly, determine if price is being rejected. If a market is going up and it hits a level, is price being accepted up there or is price being rejected? If price is being accepted, it's going to move sideways. But if you're getting clues of price being rejected, the market will often sell off. And order flow, there's much more to order flow. And again, this information is not available on a normal bar chart or candlestick chart. It's available on a volume footprint chart, whether you use My Order Flows Trader or another software out there. It is going to give you an edge over other traders. And again, trading is all about having that edge over the people you're competing against. Now, when I launched the Order Flows Trader software a couple years ago, I wanted to make my software different. I wanted to add value to it. And so I threw in 4 tools to help traders trade order flow. And these are ways that I analyze the order flow. And one of them is what I call the ratios. Now, a lot of software has actually been copying this since I released my software. And they call it, the order flow algo, or, order flow this, algo that, give it some fancy name. But basically what the ratios do is there's 2 types of ratios. There's a ratio bounds high, which indicates price is being rejected. There's a ratio bounds low, which indicates price is being defended. And a ratio is derived by looking at the volume being traded in the bar at the extremes of the bars. And ratios appear on the top of down bars or red candles. As you can see here, there's a red candle, it's on top. There's a red candle, it's on top. A red candle, it's on top. Or the bottom of green candles. On this move up, you see those green candles, ratios on the bottom. Now there's 2 colors. There's a blue ratio, and that's telling me it's a ratio that I think is important to watch. And watch this level up here, what's happening. Pay attention. And a black ratio is just your normal order flow. Like here, 3.055, 18.58. That's just telling me the market is doing what it's supposed to do. People are facilitating trade, and there's nothing special. But when you get up to levels, either if you have your own support and resistance level, your pivot levels, or your highs of the days, lows of the days, swing highs, swing lows, look for the ratios. Why? It's because that's where you're going to see, that's where you want to see price rejection. That's where you want to see price defense. And the markets often turn at ratios. And this, for example, this is the 5 years. You're at your high here. This green line is their high. You make a new high. You've got a ratio bounds high, which indicates price rejection. And what happens? We sell off from the high of the day directly to 1 tick above the low of the day. And then you get a ratio bounds high here indicating price rejection at this, right around the low of the day. And we start to rally again. So, look for ratios around swing highs or swing lows. Another example, soybeans. This is the high of the day up here. You have a ratio of 7.41. Okay, there's nothing, it's just your average order flow. Lots of times you get that. The market is doing what it's supposed to do. But there are times that the market is just screaming at you, telling you something. And down here, just off your low of the day, you have a ratio bounds low indicating stopping volume, supportive volume in the market. You just sold off from your high and you stop here. Why? Because you got very decent volume down here, and it's highlighted to you with this ratio. It's telling you, hey, don't miss this opportunity here. Again, it's not a red light, green light system. It's just helping highlight to you what's happening in the market. Honestly, I used to do all these calculations by my hand, or in my head, by hand on a calculator. But when I was talking to the programmer, I said, hey, I can put that in there. That's great. It's going to make my life a lot easier. It's going to take, I could use my brain power for something else. And you see how the market reacts. The market rallies, from basically right off your low, again, back up towards your high. And, so that's the ratios. That's what makes the order flows trader different than a lot of the other order flow software out there. It helps you with your analysis rather than just organizing the data in the same volume footprint chart that everyone else has. And one thing that people tend to forget, when they come to the market, is that the market is a two-way auction. There's a bid and there's an offer. And when you have a two-way auction, oftentimes you can get market imbalances. And what's a market imbalance occurs when one side, either the buyers or sellers, become aggressive and dominate the other side. And you have more volume traded at like a certain ratio, like a 4-to-1, like I explained earlier. You got more, say you got, 10 lots traded on the bid, but you got 50 lots traded on the offer, you would have an imbalance because the aggressive buyers bought more on the offer than what was sold into the bid. And this information is detailed in the order flow footprint chart. So remember, there are never more buyers than sellers. You just have more aggressive ones, okay? And again, how does it look on a footprint chart? It's these blue numbers, that's a buying imbalance. It's the red numbers, that indicates a selling imbalance. And again, it is important. I'm going to show you in a minute on how you can use it in your trading. Okay, so another indicator that I wanted to have in my software was something that could highlight to me areas where traders are trapped in a position. I don't like using the term trap traders per se because no one's ever really trapped. There's enough volume in most of these markets nowadays to get out at a relatively small, I'll say small loss, but mitigated loss rather than having it turn and explode against you. But still, you've heard the expression long and wrong. That would be what I consider a trap trader or someone that sold at the low of a move and the market starts moving against you. We've all been in that position. We've all bought highs of a move. We all sold lows of a move, and it sucks. And with order flow, you can see these areas where you do get trap traders. And the order flow trader software will indicate to you by drawing a red arrow when I think traders are trapped at a high, or a green arrow. It's hard to see here, but there's a green arrow down here at this bottom, where traders are trapped short and the market is starting to rally. Okay, so here's a perfect example. This is yesterday in the Japanese yen at this high of 89.20. I know that traders are trapped up here, and then the market sold off from 89.15 down to 8900. That was a nice move. This next example here, where is it here? This is the crude oil. Okay, I get the indication that traders are trapped down here, and what the market do? It makes a nice move from the 48.25, 48.30 area up to the 48.50, 48.55 area. And just this morning, this is soybeans. This is just a few hours ago. At this low of the day, it's hard to see, but there's the green arrow right here. I know these traders here are selling into this low. They're trapped. They're trying to get past this level at 950, and they can't. So once they realize they're stuck, they're selling down here, but there's a big buyer here, okay? And the market starts rallying. So all these people that are sold, at this area, they're starting to panic. Hey, why isn't this market going lower? And all of a sudden we're ticking higher. They got to start thinking about covering it. I mean, yeah, some people will try and hold it as long as they can, but at some point, they got to capitulate and get out. And that's what a trap trader is. And you can see how this market, it moved up from the, the 950 area, 951 here in this bar, all the way up to 955. Later we traded all the way up to 956 and a half. Although fairly recently, I was checking the chart just before my presentation, and we did come back down and take out this low, and you had a lot of selling imbalances going in. So this was a big support level, but early on is giving you a nice, decent trading opportunity to get 4 cents, 5 cents out of this market, and that's a decent trade in the soybeans. Soybeans aren't as glamorous as trading crude oil or E-minis, but you know what? Up until probably about 10 years ago, the soybean market probably generated more millionaires than any other market up to that point in time on floor traders. But again, if you're looking at a normal bar chart, this is what it looks like. This is that soybeans. Can you tell that there was a lot of buying down here, supportive buying? That traders are trapped? No, you can't tell. People say, well, you got an engulfing pattern here. Well, yeah, you got an engulfing pattern here. This didn't work out. You had an engulfing pattern here. Next bar was up, but then you got the pin bar based on the last presentation, and then you sold off again. So you can make the argument either way. That's the thing with candlesticks. When they work, everyone says, oh, it worked because you have this candle. But when they don't work, they don't say, well, it didn't work because you have this bullish engulfing pattern and the market sold off. They only talk about it when it works, surprisingly. But if you're just looking at a normal candlestick or a bar chart, you're not getting that information that you're seeing down here. You're seeing massive amounts of volume. I can see traders are stuck down here, and the market is starting to tick up. It's just a no-brainer trade. Like I said, order flow is not a red light, green light system, but once you understand what's happening in the market, things just really make sense. Things start to fall in line for you. So, ask you another question. What do you think moves the markets? We all know what moves the markets, big money. I answered that for you. But do you really think you can determine what the big money is doing by watching a moving average, watching a MACD, watching an RSI, ADX, or whatever technical indicator you're using? You really think that's going to give you an edge over the big traders that are using fundamental analysis? Probably not. In all honesty, like I said earlier, all those moving averages, any derivation of price calculation has been data mined to death. And again, if you think you're going to come up with something, more power to you. You may be the one person out of a million that finds something, but honestly, the futures market, the forex market, the stock market attracts the best minds in the world. Now, honestly, to get involved in the futures market at a hedge fund, you got to have a PhD in rocket science. Literally, they're hiring scientists from NASA to come in and do programming for them, and trust me, they're mining the heck out of anything related to price. So is that going to give you an edge? Of course not. The market doesn't move because a moving average crosses another moving average. The market doesn't move because an oscillator moves above the zero line. And once you realize that and can accept that, trading is going to become less stressful. Most traders have gone through that whole indicator trading phase, and when it works, you think it's easy. You think trading is easy, but it's not. If trading was that easy, everybody would be doing it. Everybody would be making money. It's not unicorns and rainbows, unfortunately. So like I said, we all know what actually and who actually moves the markets. It's the big commodity trading firms, whether it's the big grain companies that do the planting and the harvesting and supplying the producers, or the oil companies that pump it out, refine it, and ship it all around the world. It's the asset managers, the real money accounts, the sovereign wealth funds, and it's the hedge fund portfolio managers that have allocations in the hundreds of millions and even billions of dollars. I remember a time when a hedge fund that had $50 million was considered a big fund. Now, if you're a hedge fund and you don't have $250 million, you're not even on people's radars. But these are the people. These are the traders that cause imbalances, because their size is so big in the market that to get in and out of position, sometimes it's difficult to disguise, and they're going to show their hand, so to speak, in the market. And what do I mean by show their hand? Well, everybody's played cards at some point in their life, whether it's poker, gin rummy, go fish, or old maid. What's going to give you an edge over the person you're playing is, well, if you can see their hand. But when you play cards, you can't see the person's hands. But when you're trading, actually you can. You can see the order flow. You can see what other people are trading in the market, and that is their hands. So you can see when their hands are strong, when their hands are weak. When they're being strong in the market, if they're accumulating a position or distributing a position, buying or selling a lot. But that's information that a lot of traders aren't using, and order flow shows that to you. It's a perfect example. Imbalances, I want to take it a step further and talk about stacked imbalances. And a stacked imbalance is when you have 3 or more imbalances stacked on top of each other. It's not a difficult concept. Now you have a stacked buying imbalance and a stacked selling imbalance. A stacked buying imbalance is when you have 3 or more buying imbalances stacked on each other. Stacked selling imbalance is the opposite, when you have 3 or more selling imbalances stacked on top of each other. So in this case, this is the low of the day in the E-minis. You have a stacked buying imbalance. You got 3 imbalances, and it's coming right on the low of the day. What does that tell you? Well, it tells you that at this low, you have buyers coming in. They're aggressively buying this low. And again, I go back to the grocery store example. You need to buy toilet paper, and you're going to use it. Now you're going to use it in the future. And if normally you buy a 4-pack for $1, and all of a sudden it's 50 cents, you're probably going to buy 2 packs, or 3 packs, because it's so cheap. And that's where we're talking about value in the market. So, when the market trades below value, you often see aggressive buyers come in and, start accumulating positions, start scooping it up because it's such a good deal. Buyers are being aggressive down here and you get a rally. And, the opposite is true for a selling imbalance. Here is E-minis, you're rallying up into this high, you hit the high. Okay, at a high, you should be asking yourself, high of the day, are we going higher or are we going to go sideways or go sell off? You're not convinced. You just had this big run up. You're not convinced that we're immediately going to sell off. So you wait. You wait for some sort of confirmation. And the next bar is down. The next bar is down. So you got the stacked selling imbalance. At this point, you should be jumping in the market, sell, because traders are being aggressive. They're coming in here and they're slamming the market. You got aggressive selling. You got very little buying, happening up here. You got all negative deltas. And what happens? The market makes a nice 5-point move lower. And again, if you're looking at a normal bar chart, how can you determine what the big players are doing? You can't, right? This is an E-mini chart. You have two lows. They literally look exactly the same. You have this candle with the big wick, the small red candle, followed by an engulfing pattern. The market, yeah, it goes up, 4 ticks, and then sells off. Here you have it, in, the engulfing pattern followed by this bar with a small body and the big wick. And this time the market rallies from 46 all the way up to 50. Well, what makes this any different than this? Well, if you're looking at the order flow, you can see it here. You've got point of control, the point with the most volume in the bar at the bottom of the bar. So you know that there's heavy buying going on down here. Okay, you have a ratio bounds low. Again, there's another thing that indicates that there's supportive buying going on down here at the low. And then you have a stacked imbalance right off the low in the next bar. So, you're coming down, you hit this low, you've got, I'll say a price floor, but you've got, very supportive buying down here, and then you've got aggressive buying coming in, and you just rally, you just shoot right up. This was a quick 4-point move. And again, if you're looking at a normal bar chart, you don't see that information on here. So, what makes this any different than this is the order flow. You wouldn't be taking this on the order flow, but you'd be taking this B on the order flow. You wouldn't necessarily be taking A, but B is a no-brainer. It's a no-brainer trade. It's what we call a slam dunk trade. And if you've ever wondered why a market pulls back to a certain level, well, think about it. Think about what's happening in the market. Once you know how to read what's happening in the market, you'll know. Like you'll see this market here. We rally up here, you pull back to this level, then you shoot higher. Well, why? If you add imbalances into it, you can see, down here you have a stacked imbalance. The market next bar up and came right back down. You see aggressive buying coming back in, and you shoot higher. Now you got another stacked buying imbalance here. You shoot higher, but then some selling comes in, and you sell back down into this area where you had the aggressive buying come in. And what you want to see is, are buyers going to come back in at this level? And you see buyers coming back in. Look at the volume. You got 94, 71, 161. Yes, there is a selling imbalance here, 16 against 71. But all that means is you had a lot of aggressive sellers coming in here. But at the same time, you have buyers there. 71 lots traded there, 161 traded here. And then the market shot back up. You're seeing this buying come back in instead of aggressive, as you saw it down here with the 52 and 31. You're seeing it passive. You're seeing people coming in here putting bids in the market because they think it's a good buying opportunity. They're happy to buy it again down here. They don't necessarily need to be aggressive. They're happy to sit on the bid and let the market come to them, and then the market shoots back up. So, trading is about risk, knowing where the opportunities are and knowing when you're wrong. Order flow gives you the ability to see where other traders are being committed in the market. And why is that important? Is because people that trade on a dome, people say, dome traders always say, that's order flow trading. Well, actually, it is a form of order flow trading, but it's more based on orders going into the market, being pulled from the market. There's a lot of deception going on there. And the difference with order flow is it's actual trades occurring in the market. And why is that important? Is because when you're in a position, you're committed to that position. At some point, you're going to think of getting out. Now, everyone's going to say, well, not everybody gets out of position. Yeah, people that hedge in the markets, which is a certain percentage, aren't going to get out. But vast majority of traders are going to get out of the position at some point. And to me, that's more important than people putting offers in above the market or putting in bids below the market or joining the bid, joining the offer, and not actually trading. You know, what's more important is actually what's traded in the market, not people's intention, it's their commitments. You know, you could sit here, you know, when you're in school, you say, oh, I want to ask out that girl, and you never do. But you always think in your head, oh, I'm going to take her out and we'll go see a movie, have a nice dinner. But unless you get off your butt and actually ask her out, all your planning doesn't matter, you know, because you're not committed to going out on the date. And it's the same thing with trading. Unless you're in a position or you can see what someone's committed to in a position, it's more difficult to make a good decision. Okay, so the next thing I want to talk about is the delta surge. Again, you know, this is the free indicator that I'm giving you guys. You go to my website, you can download. I'll show you how to download it in a second, but I'm going to talk about it. And what it is it picks up, it reads the delta, and it picks up, you know, when sellers are getting aggressive, or, you know, when delta's getting, you know, sellers are getting aggressive or buyers are getting aggressive, and it's building up. So you can see here on this move down, you have the delta surge kicking off right here, and you make a nice move lower from 151.20 down to 151.04. You know, that's a nice move in the bonds. And what it's doing is reading the delta. You're seeing it's getting stronger, minus 93, minus 480, minus 1162. And it just highlights to you that, you know, sellers are starting to take over in the market. And why is, you know, how I came up with this, just real brief background, is because, you know, I used to trade a lot of commodities at Cargill. Palm oil was one thing. And if you're looking at palm oil, sometimes, you know, with certain commodities, the market just goes flat on you, it just moves sideways. But, you know, there are times where, you know, buyers are slowly accumulating a position or slowly distributing a position, and that will show up in the delta. And when it does, you get powerful moves. This is crude oil. And you can see we're coming down here, sort of forming a base down here, going sideways. But what's happening is buyers are starting to accumulate a position down at this low area. And you can see it in the delta. You know, delta's increasing. Boom, you get the delta surge, and you got a nice 20, 30 cent move in the crude oil. And you actually get up to this point up here where you got some trap traders. That's this red arrow up here. You got a ratio bounds low indicating some stopping volume up there. The market did sell off. Excuse me, I had a cough again. But that's, you know, that's just talking about the other stuff. But again, the delta surge will clue you in on areas where buyers are accumulating a position or sellers are distributing a position. Now, you could download this for free on my website. Quickly, just go to my website, you know, later, download Delta Surge for free on the main page. Click on it. It takes you to this page. You can watch this video. It's about 30, 40 minutes long. It's a sales page. Scroll down to the bottom, and it'll take you down here to this box. Enter your email address. Click Get the Delta Surge Indicator. You have to enter your email address for it to work. You don't just click here. You have to enter your email address, and after that, it takes you to the page where you can download the indicator. Once you got the indicator, you can load it onto your NinjaTrader, and off you go. So hopefully by now, you can see how powerful order flow analysis is. Did you think it was easy or difficult? Honestly, I hope I made it as easy as I could for you guys. I'm a big believer in keeping it simple. You saw how messy my charts were. They weren't messy at all. I don't got a lot of squiggly lines or anything like that on my charts. I believe in keeping it simple, and order flow is about as simple as it gets. So if you found this presentation useful, helpful, I'm sure you're going to like the Order Flows Trader software package that I put together. And you know, once you understand what's happening in the market, you'll find the market just makes sense. So again, you don't have to spend 10,000 hours of screen time, and more importantly, you don't have to keep flushing your money down the toilet on, you know, worthless indicators, you know, trading systems, etc. Now, again, you know, I've worked in the futures trading business for 20 years. Okay, it's a long time. But before I got into it, I was managing a grocery store of all things. Well, that's how I paid my way through college, was working in a grocery store. When I got out, someone said, hey, why don't you come, you know, work for me? So I did. That was in 1991 after graduating college. The money was decent, but I had to make a decision. Do I want to do this for the rest of my life? And you know, there's nothing wrong with working in a grocery store. I still got friends that do it. And honestly, I probably wouldn't be on the path I'm on now if I didn't work there. But I wanted to be a trader, so I had to take the steps to becoming a trader. And at that time, the easiest way was to go to the CME floor, the CBOT floor and get a job as a runner. And I did that. I've made 25 cents above minimum wage. And that normally most firms just paid minimum wage. The company I was with, Dean Witter, actually paid 25 cents above minimum wage. I had to sleep on my brother's sofa for 3 months in Chicago. But you have to break your old habits if you want to make a change in your life. And that's why I put together this package, because you don't have now necessarily the ease of entry into trading that I had when I first started. So everything I talked about for the last 40 minutes will be totally useless if you go back to your old habits of doing what doesn't work. If you want to do that, then okay, that's fine. But if you want to break that habit and learn how to trade, I'm offering you the tools to get you to that next level. So if you're ready to see how to add order flow analysis to your trading, let me know. Type yes. And what I'm offering you is the Order Flows Trader software. It runs on NinjaTrader. There's NinjaTrader 7, NinjaTrader 8. Personally, I prefer NinjaTrader 7 at the moment. I've tried NinjaTrader 8. Personally, I don't like it. I'll say I'm still getting used to it, but they sort of had the stealth release back in November around Thanksgiving. I didn't really like that. They've been saying they're going to release it for how many years, but NinjaTrader is still going to be supported, and it's still stable. They're still supporting it. I'll probably move personally to NinjaTrader 8 maybe in a few months later this year. Any upgrade is free, if you want to go to NinjaTrader 8. I also have a Sierra Cards version. If you're interested, email me. It's with a joint venture with another company, but email me. We'll get you set up. A lot of the same stuff that I'm offering here, will go with the Sierra Charts version. And with the Order Flows Trader, it's the volume footprint chart software that you see generating the charts in this presentation. And it comes with 4 pre-programmed order flow analysis tools. And I talked about 2 of them, the trap traders and the ratios. And I'm also going to give you my chart template. Okay, so you could have your charts looking the same way as mine. You don't have to spend time trying to figure it out. I want to get you up to speed as quickly as possible. But having an order flow software is one thing. You got to know how to use it. What's the point of buying a fancy camera, like my wife? She got this fancy Nikon camera, but she just uses it in automatic mode. I give you the software and the education to go with it, so you know how to use it. So what I'm going to offer as well is the Order Flows trading course. I normally sell this for $297, and I sell it regularly. It's 20 lessons, 15 hours of video instruction. You get it for free with the software today. And additionally, I'm going to give you lifetime access for my Order Flows trading room. It used to be $299 a month for outsiders, but I don't allow outsiders, just from users of my software now. And you have lifetime access. I've had some traders been accessing it for over 2 years. So do the math. At $299 for 1 month, it's only $299. But at a year, that's $3,500. But we'll just consider it $299. Not everybody uses it. Not everyone could go in at that time of day. But if you start adding this stuff up, that's already $1,400, $1,500. But for a one-time payment, again, it's one time. I'm not saying pay me $100 today and $100 for the next 5 years. Just a one-time payment, $999. Go to orderflows.com/webinar, and it'll take you to the page. I'll go through it in a minute. There's no other monthly payments or payments in the future. You will need to pay your data fees and NinjaTrader fees, but you get NinjaTrader for free if you open an account with NinjaTrader brokerage. And as a special bonus for this webinar, we'll give you 3 additional order flow indicators: the Valtos flip, the U-turn, and the transition. I sell this indicator package for $650. I'm going to give it to you for free today. But this bonus is going to expire in the next 48 hours. And just to give you an example of one of those indicators, this is the Valtos transition today. On how I named these after myself because people keep stealing my ideas and putting them out as some big fancy, order flow algo this, order flow algo that. And this is how it looked today, this morning, May 18th, in the Dow, mini Dow. You got a nice sell here, 25.90 down to 25.50. This buy would have stopped you out. Fair enough. Not every trade's going to be a winner. Then you got another buy here, again, from the 550 area all the way up to 600. So start adding this together. You'll see it's worth more than what I'm asking for. It's easily over $2,000. But for just a one-time payment of $999, you can get everything basically. And if you don't believe what I'm saying, I post a lot of videos online for people to watch. this will comment. You know, they say, you know, it's a lot of useful information. You know, the best daily order flow analysis yet. You know, people don't see the value in what you're sharing. They're missing the point. And, you know, put it in perspective, what you can spend $1,000 on. You could buy the new iPhone 7, and in a year you could buy another one. Or would you rather learn how to trade? So go to the website, orderflows.com/webinar.html. You'll be taken to this page. Just scroll down to the bottom. You'll have a choice. NinjaTrader 7, NT7, or NT8. And you know, just click there. You're taken to a PayPal page. I don't get your credit card information. It's all done through PayPal. So don't worry. And you know, so why you should join Order Flows today is because you see the power in order flow analysis, and you want to change your trading. You want to make a difference in your life. You understand what's happening. You want to understand what's happening in the markets, and Order Flow is going to help you understand what's happening. Sorry, excuse me. What's happening in the markets? You know, you're excited to find low-risk trading opportunities. You're tired of losing money because you can't find low-risk trades. You know, you're risking too much on a trade, and you want a life of freedom and fulfillment. Honestly, for me, you know, I was able to retire from trading at 43, and now I get my fulfillment by helping other traders. And order flow trading has allowed me to do that. So if you want a free copy of my book, just email me, mike@orderflows.com, with the subject line, send me your book. I did tell you how to download the Delta Surge. Just go to my website. There's a link right on the front. It says download Delta Surge for free. Click on that. So, you know, act now. You know, what are you waiting for? You know, I've made it about as easy as I can imagine. I like to keep things simple for people. Go to my website now, orderflows.com/webinar, to get started. So thanks, Renee, and I hope to see everybody on the inside.